Hello, everyone, and thank you for joining us for this portfolio series. This is the first edition of an event that we hope will become a regular feature. Um, it's always a pleasure to showcase the innovative and sustainable investment ideas that climate finance entrepreneurs have been developing and have launched with the support of the lab and the Catalytic Climate Finance Facility. We may be referring to that as CCF, so that's what the acronym stands for. I'm also happy to be co-hosting this event with my colleague Maria Ruiz, who leads the lab's Latin America and the Caribbean program. Hi, Maria. Over to you.
Hi, Vikram, and hi, everyone. Thank you so much for joining us. It's very exciting for us to host this session and to present this group of innovative blended finance vehicles that focus in Latin America's land use sector, which is critical to meet the region's climate, nature, and also development goals. And today we will be featuring 6 highly impactful solutions that, as Vikram mentioned, we have supported through the lab and the CC facility. And all of them have bold impact ambitions. Each presents a unique opportunity to address some of the most significant challenges that we face in climate finance in the region in a unique way. So we're going to have an interesting portfolio of different ways to solve different challenges. These are real-world solutions that have a strong potential to not only solve the challenge, but to do that at scale, mobilizing capital to deliver that impact and to mobilize not only international capital, but also domestic capital, hopefully.
That's right, Maria. But before we get into the pitches, which is really the heart of this event, let's take a step back and understand the scale of the challenge ahead of us that many of these instruments are going to be trying to address. Limiting warming to 1.5 Celsius, we know requires massive global investments, particularly from the private sector. And even if 1.5 Celsius is hopefully temporarily only out of reach, we must not lose momentum on mobilizing capital. One of the things CPI is most known for is our analysis of global climate finance flows. It's been a flagship analysis of ours since the beginning, and we have tracked global public and private investments in climate action for now over a decade. Our latest report found that annual tracked climate investments surpassed 1.5 trillion in 2023, and an updated analysis is due in the next few months, but this is the current number. And the green columns in the graphic that you're seeing now show what the average annual climate flows have been in the 5 years before that, from 2018 to 2013. And we can see that the amount has nearly tripled since 2018. However, the yellow area on the graph shows the amount of climate finance that is needed annually by 2030 to avoid the worst impacts of climate change. This amount is at least 5 times higher than the current level of climate finance flows. So that is a fairly dramatic scale in the dramatic funding gap. However, I think it's worth noting that this represents less than 5% of global GDP. So while that's not an insignificant number, it is hopefully doable.
Yes, and now when we zoom in on Latin America, we see that the region receives a disproportionately small share of global climate finance flows, with less than 5% of all climate finance flows being directed to the region, which represents roughly 52 billion per year. The good news is that these flows are fairly evenly split between public and private sources. So we see private investors being active in investing climate solutions in the region. And this might be explained partly because the majority of these 52 billion per year are directed towards mitigation solutions, mainly related to energy, which has had a more clear business case. At the same time, agriculture, land use change, and forestry are the region's biggest sources of emissions, particularly in countries like Brazil, Colombia, Argentina, and Mexico, the region's largest emitters. And then in some countries, it represents the majority of the emissions, and in others, nearly all of the emissions. So we see that this sector is critical for climate goals in the region, and it's not receiving financing, with less than 10% of that 5% going to the sector. And the same reality is found globally, where just 7% of total funding goes to agri-food systems, which represents only 95 billion invested in 2021 and 2022 globally. So If we are to meet the climate goals that we have, as Vikram was saying, this figure must be multiplied by 11 times in the next 5 years.
Yeah, and despite the significant climate finance gap, uh, we, m- we are told money is available, but there are key market challenges that hinder the launch and scale up of new high impact investment solutions. And the main one is a mismatch between risk and funding availability, especially in the early stages of project development. At the top of this chart, we see the typical life cycle of an investment project, from feasibility and design through to maturity. The early stages, particularly feasibility, piloting, and early adoption, are the most fragile and capital constrained. That's when many of these potential ideas go through their own valleys of death. And this is due to several factors, including limited funding for feasibility and development, a lack of startup capital, or availability of concessional capital, and ultimately, as you get closer to the sort of maturity cycle, a relatively low risk tolerance from institutional investors. So this misalignment creates a financing gap that blended finance mechanisms are designed to address by using either public or other concessional capital to de-risk early stages and unlock private capital down the line.
Yes, that's right. And at CPI, we aim to tackle many of these challenges that Vikram just outlined through two of our flagship initiatives, the lab and the CC facility. So the Global Innovation Lab for Climate Finance was launched 11 years ago in 2014. And in these 11 years, we have helped design, structure, and launched over 78 early stage investment vehicles and instruments that are addressing key barriers to access climate finance in emerging economies. And the Catalytic Climate Finance Facility, which we run in partnership with Convergence, supports vehicles that have already been piloted, have already been launched, and are deploying capital and are ready to scale, so are a bit more advanced. And together, these two programs help unlock new opportunities for investors by supporting these solutions that are designed to manage their risk and to make this investment viable for them. And also, it helps and create opportunities for projects and companies in the ground who are promoting solutions and currently are not having, financing available, as we were saying. So these two aim to bridge those gaps by providing a pipeline of investable instruments focused on climate finance in emerging economies.
Yeah, let's talk a little bit about the lab. Lab has a special place in my heart because I've been associated with it from day one, even before I started at CPI. The lab supports climate finance vehicles at the design, feasibility, and piloting stage to test and refine the ideas, structure, and implementation strategies that these climate finance entrepreneurs are proposing. The lab's theory of change revolves around the collaboration between public and private sector, openly sourcing concepts from finance innovators, and a powerful network that help move these ideas into action. More than 100 member organizations are part of the lab, spanning both its global program and now 5 regional programs. To date, the lab has supported nearly 80 solutions that span funds, facilities, guarantees, bonds, insurance, credit products. So you can essentially, every type of financial instrument exists in its portfolio over this period of time. And each of these instruments shares a common goal. How do you harness limited public or concessional capital and unlock larger scale private investment? Since its inception a decade ago, the lab ideas have mobilized more than $4 billion, illustrating that is having a significant impact in driving climate finance forward.
That's right. And then through the CC facility, which, as I mentioned, we launched a couple of years ago, we aim to address the critical acceleration gaps at the adoption and scaling stages, so a bit more advanced than the lab instruments. And then through the strategic deployment of grant funding together with tailored acceleration support, the CC facility focuses on proactively addressing the barriers that these instruments are facing to raise capital, which is a challenge we're all familiar with. And it builds the capabilities of the grantees to generate this business traction, secure funding, and accelerate the market rollout with the ultimate goal of scaling impact, as I was mentioning before. So at its core, the CC facility's value proposition centers around three key offerings. So first, we provide up to 70 days of customized technical support in a period of a year and a half to leverage all the lessons learned and technical knowledge that we have gathered through the lab and CC facility to put it at the favor of these instruments so they can succeed. Second, we provide up to $500,000 in working capital because we know that fundraising and having our own way is expensive. So we want to give this oxygen to these instruments so they can really scale. And third, we give access to a dedicated learning hub where we continue to gather useful insights and lessons learned, as I mentioned, around blended finance vehicles, climate finance, specific sectors like agri-food systems, and what does it mean to invest in these assets in emerging economies. So this program was launched 2 years ago in 2023, and so far it has awarded 5.5 million to 14 innovative vehicles to date. And these vehicles, in turn, have collectively secured commitments of more than $150 million, which is very positive.
And together, the lab and the CC facility form a pipeline that helps climate finance innovations move from early design to market implementation. So with that in mind, and a lot of this talking, we are excited now to turn the spotlight on our 6 outstanding projects from both these programs that will now share how their solutions are driving climate impact, specifically in the Latin American land use sector. I'm going to briefly describe all 6 of them in the order they will be presenting in due course. The Amazon Food and Forestry Bioeconomy Financing Initiative by Impact Bank offers financial support through a fintech platform designed to enhance the bankability of local regenerative businesses. The Land Banking Group creates a new methodology for valuing nature and a market mechanism that they call the nature equity assets to allow direct investment into natural capital stocks, biodiversity, carbon, soil, and water. Third up is the Growth Next Generation Agriculture by Thrive and Folio Institute. And it is a debt fund that finances the purchase of biological inputs from local SMEs by farmers, accelerating Brazil's transition to regenerative agriculture. Followed by Regenera Ventures by SVXMX that invests in regenerative businesses in Mexico's land use sectors, combining redeemable equity with technical support to scale climate resilient practices. And after that, you will hear from the Amazonia Impact Fund by Impact Fund 1, I may say, by Amazonia Impact Ventures that uses impact-linked debt financing and technical assistance to support indigenous and Amazon-based organizations. And finally, you will hear from the Biodiversity Bridge Vehicle by Pontera that generates carbon and biodiversity credits through high-integrity reforestation projects with native species and close participation of local communities in Panama and Mexico.
And before we begin with the presentations of the instruments, let me quickly explain today's dynamic and structure. So you will hear the 6 pitches in total, and after all the presentations, we'll split into 2 breakout rooms so you can engage more directly with the team that interests you the most. So we will have one room, which will be composed by the first 3 teams, which are focused on Brazil. And then we're going to have the second one of the remaining 3, which are focused on other countries of Latin America. So please hold your questions until all 6 teams have presented. And then when the time comes, you're free to choose whichever room you would like to join. And then you can also move between the rooms at any time. So now I'll pass it over back to Vikram to kick things off.
Great, thank you. I would now like to invite our first speaker, Gabriel Ribbenboim, who will walk us through the Amazon Food and Forest Bioeconomy Financing Initiative, a program that is designed to unlock capital for sustainable forest-based value chains in the Amazon. Welcome, Gabriel. Over to you.
Thank you very much, Victor. Thank you also for the opportunity. I'm Gabriel from Impact Bank. We provide affordable loans to micro, small, and medium enterprises in the bioeconomy sector in the Amazon. So I'll be presenting today the Amazon Food and Forests, which focus on financing standing forests and thriving communities. Next slide, please. So our team is composed by Impact Bank, which is a Brazilian-based fintech with a lot of experience on the forest side, also large-scale impact initiatives, but also joining people from the banking sector, like the former CEO of Santander in Brazil, Mr. Fábio Barbosa. And also as an outcome of the lab, during our acceleration last year, we were able to brought a new partner on the structuring, which is BTG Pactual, which is the largest investment bank in Latin America, with billions of dollars in AUM, to support us on the new design and structuring of the Amazon Food and Forest Fund. So BTG Pactual will focus on the credit risk assessment and also financial and environmental reporting, while Impact Bank will focus on sourcing high impact projects. So as of today, sustainable value chains, basically in the Amazon, represents less than 1% of Brazilian GDP, but also has a lot of potential to grow up to 4% of our GDP. But while these micro, small enterprises are able to deliver high impact to the Amazon region and also to other places globally, they have a lot of restriction related and regarding to access of capital. They are still perceived as a high risk, and also they hold a high distribution costs. So our contribution to this ecosystem is a blended finance facility that delivers what investors are seeking. So high integrity, environmental and social management systems, also providing returns and financial sustainability, and one of the most important parts, also scalability. Next, please. So Food and Forest is a blended credit facility to strengthen indigenous people and local communities' bioeconomy and small and medium enterprises connected with those segments, and providing solutions, financial solutions and technical assistance to their business and also value chains. Or in order to make that happen, we built this structure based on Impact Bank, cutting edge banking, so financial and non-financial infrastructure. We have a digital bank that also help us to navigate in a different credit scoring, bringing inclusion, transparency, and also financial efficiency. Next, please. So we are looking also to expand the pipeline. Today we have nearly 30 non-timber forests and food products value chains, average or valuing almost $30 million in pipeline operations per year, mostly certified products and value chains, where 60% of this pipeline is composed by Amazon nuts, açaí, and copaíba oil. In the second phase of this fund, we are also looking to expand the pipeline, bringing other market opportunities, such as including ecological restoration, family farming, and other biodiversity products. Next, please. So this first 5 years of the fund, it's focusing on providing or generating $120 million in credit operations, focus on strengthening almost 300 local MSMEs, and so supporting value chains to provide a better production, a balanced environment, and a better life for all. Next, please. So in terms of phase, during the acceleration of the lab last year, that we also had the support of the Nature Conservancy in Brazil, we implemented a pilot or a MVP of the fund, where we were able to provide almost $2.7 million in credit operations, benefiting more than 30 local MSMEs, and also having off-takers such as Michelin, Lush in UK, and other partners in Brazil. So now we are working on market launch and scaling. So during this year, till the end of this year, we are structuring a new fund together with BTG Pactual, and we are looking to have our first close and launch by Q3 this year. So today it's a $24.6 million opportunity, combining commercial, concessional capital, and also grants. This grant support technical assistance facility, working with project preparation and technical assistance, while commercial debt and concessional debt provides the capital needed to have these two different financial products, loans and discounted invoices. Next, please. So thank you very much. Looking forward to engage with you in the breakout sessions.
Thank
Great,
you
thank
so
you.
much.
Oh, yeah.
Sorry, background.
Go, Maria, go.
We both thank you so much, Gabriel. And we think that this is a very interesting solution to support a critical sector, which is bioeconomy in the Amazon. So thank you for that. And now next up, we have the Land Banking Nature Fund, which is creating a new way to value and invest in nature as an asset class. So please welcome Jamie Batho, who will walk us through the platform. Go ahead, Jamie.
Thank you, Maria, and hello, everyone. Well, thank you again to the CPI for supporting us through last year, and also for putting on events like these and for having us. My name is Jamie. I am leading strategic projects at the Land Banking Group. We are a nature fintech that's built a solution to bring the value of natural capital into our economic systems with new data and new financial products. We do that across, well, we work globally. We do it across agricultural systems, conservation systems, and also with sectors like mining and with the built environment. But specifically today, we're talking about applying that to South America and to agriculture. And we know, of course, I don't need to tell you all of this again, but the natural capital stocks in South America hold an immense amount of value. The standing carbon, the biodiversity, the water ecosystem services, there's immense value in these ecosystems. But we haven't attributed value to those systems. We don't invest into them. And actually, we continue to cut, clear, burn these ecosystems at an alarming rate. So, of course, we need to fix that. We need to protect pristine ecosystems, but also without restoring degraded lands, the pressure on those pristine ecosystems is only going to grow. And farmers, governments, communities are going to have the impossible question: how do we keep establishing, or how do we start to establish and continue development, economic development, whilst conserving natural capital? These things are currently at odds with each other. And that's despite the immense value that restoration of degraded land systems provides. And if we think specifically about agroforestry systems, that is reduction of ecosystem pressure, crop resilient production, climate mitigation, decreased soil erosion, increased biodiversity, improved economic resilience. And we don't bring these value streams online because we don't have a mechanism by which people can put money against these systems and have the benefits from those systems flow. So that's then really the core of what we do at the Land Banking Group. The core of the core is a contract that links somebody who needs natural capital with the person on the ground who stewards that natural capital. And they are layered, so let me explain them briefly. I'm starting at the bottom here. These contracts are indexed on real outcomes. So we're deploying the latest MRV and Earth observation, in situ data sampling, bioacoustics, camera traps, the usual suspects, to make sure that any contracts are indexed on real outcomes, meaning that if a company like Nestle is putting money into biodiversity, they are knowing if the biodiversity is improving or if it is not. The second step, the middle step here, is then valuation mechanisms. So it's one thing to know if your biodiversity is improving, if you put money against it. It's another thing to know how much value you get from that biodiversity. So we deploy valuation mechanisms that help businesses understand what the value of an increase in natural capital or a maintenance of natural capital means to their balance sheets. And that then allows them to be the third thing at the top here, which is asset grade. So because we are putting money against an asset that derives us value over time, we can hold these on our balance sheets. And we think this is then the breakthrough that starts to align business value with the value of natural capital. Next slide, please. So where do we put those contracts and what do we do with them is the question. So our instrument is a fund structure, which is capitalized by a blend of investors on the left-hand side here. It's then deploying money into, on the bottom right-hand side, single projects or multi-projects where restoration of degraded lands via agroforestry systems is implemented. These projects are then obviously producing value streams, some that are monetizable now, i.e. commodities and carbon credits, some that are not, and those are the value streams that we are working on. We're then linking those value streams to top right outcome-based funders. So these are the businesses, the actors in the landscape that need that natural capital. So this is concretely actors that source from these locations, companies in the landscape that benefit from the improvement of natural capital, or businesses that need to mitigate impacts beyond their value chains. So we think these contracts help us open up these markets from a project into markets rather than having to rely on single commodity supply chains in order to build a resilient business model. Next slide, please. Obviously, everything we're talking about here is kind of impact driven, i.e. we're trying to value impact and improve business models because of it. If we take a simple case from the portfolio, this is a 40,000 hectare case in Pará state in Brazil. We see significant improvements across the board in terms of natural capital. So a third increase in biodiversity, a very large increase in water and water holding capacity, again, a significant increase in carbon, and also a meaningful increase in, or lack of increase in soil erosion. So impact is really obviously at the core of this. Next slide, please. Where are we and where do we start? So we're starting in Brazil, where we're building a pipeline with our first project partner, who is Belterra, who I'm sure many of you have heard of. They've got a lot of experience in setting up agroforestry systems, working with farmers and bringing these systems to market. That's over 2,000 hectares and tens, if not hundreds, of farmers that they're cooperating with. So we start in Brazil, and we will be expanding project pipeline very soon to projects that we have in Suriname, which are bioeconomy focused as well. Next slide, please. Where we seek partnerships, there are two opportunities. One is with the current SPVs that are live. So there are two SPVs focused on current Belterra activities, both of which are SPVs that require 12 million to be fully capitalized, and that's 2 million in grants and 10 million from commercial investors. The second is to support us in structuring a larger fund that will look at investing into many more hectares than are currently under scope within the live SPVs. For this, we've received a grant. We're yet to sign the grant agreement, but we received it. So we're looking to top up money that we need in the short term to structure this facility and build project pipeline out fully. Next slide, please. So that is us. Please let me know if you want to get in contact about either of the SPV or the fund setup. More than happy to talk in more detail, either in the breakout rooms or beyond. Thank you.
Maria, did you want to?
No, thank you, Jamie. I think we can move to the next one.
Okay, I guess that's good then. We need to, I guess, move up time, and we'll save all the questions for the breakout room. For our next financial vehicle, I'd like to welcome Mauricio Quintela to present the Growth Next Generation Agriculture, or GAN. GAN is a climate resilience debt fund designed to accelerate Brazil's transition to regenerative agriculture. Mauricio, the floor is yours.
Hello, thanks for having us. Thanks CPI for all the support on this initiative. So, hello everyone. GAN, it's a credit facility, basically focused on the agriculture supply chain. Our goal here is to unlock bio-input SMEs and regenerative input solutions for the Brazilian market and for tropical agriculture. You can jump to the next slide, please. So who we are here? So this is a partnership between Thrive and AgFintech, the company that I am representing here. Folio, a no-profit organization, and of course, the lab. We joined the lab in 2024. We were endorsed in October last year, right? So all these logos here, basically from the Thrive presentation, is basically companies that already invested in our credit operation, credit facilities, or either credit or equity. And the other institution, basically that institution that partnered with Folio and also invested in their initiatives. If you can jump to the next one, please. So at Thrive, we are a ag fintech. So we work in the ag supply chain here, use AI basically to improve credit process, to improve the process of price risk in the sector. And we also a structured finance solution in the market. So we have like a track record of similar structures like this. And basically, this is always based on our software and a way to, let's say, standardize the process of credit and price better the risk in the sector and unlock capital for farmers and all the supply chain. If you can jump to the other one, please. So about Folio, our partner here in this initiative, it's a no-profit organization. So they work basically connecting farmers, bio-input companies, the academy, university, and research institution, basically to improve the conversations about region ag, and also in the end, improve the adoption in the field. So they have their annual event about it. So where they put together farmers, bio-input companies, and so on. Really believe on that cooperation is the key here to improve the adoption of that in the field. So basically, why region ag matters? So this is one important thing. So basically, we are here addressing a structuring challenge here. We are basically addressing something very important, which is basically unlock the working capital for bio-input companies, right? So we are in a turning point in the tropical agriculture. Basically, we have seen in the last years the rising of production costs for farmers, the loss of biodiversity, lower resilience in the field, and mainly all of that with a lot of pressure from climate volatility, right? So we need to do something, right? We need to accelerate the adoptions in the field. So this is why we created this credit facility to help these companies to lead this process, right? And if you can jump to another one, please. So this is a very, let's say, high touch process. So this is why we believe that if we empower input companies, we will be succeed. So it's very important to say that this is a process, right? So this is not a product, right? So we need to have orientation in the field and contact with farmers and through these companies. So this is a very high touch business. So we need technical assistance. So this is why we are empower the agents of change, which are the bio-input companies that we are offering credit to them, right? If you can jump to another one, please. So basically, this is a market already of $1 billion in sales in Brazil. And very important to say that at least 50% of the credit of working capital credit comes from the supply chain in Brazil. And if you take like all the input companies to sell, how they sell their products, basically they need to sell on credit, and around 80% of the transaction are on credit. So this is why it's important to empower these companies with credit and also with technical assistance to, let's say, speed up the process of adoption in the field. So basically, if you can jump to the next slide, please. So we created this fund. So our investment thesis here is basically to invest in asset-backed security from these SMEs, from these bio-input companies. The impact vision here is to strengthen credit capacity in the field and expand the adoption of region ag, and also with knowledge and dissemination of the knowledge and the practice of region ag. And our strategic approach here in terms of the instrument is basically diversification in terms of products, regions, and company, and attraction here with these different pockets, right? The FIs, commercial capital, and others. So this is if you can jump to the next slide, this is basically a very, let's say, proven structure in Brazil. It's a fund that invests in other assets, right? Asset-backed security. We decided to have between 8 to 12 asset-backed security from these SMEs that we're going to support, and basically always invest in the senior tranche of this ABS, right? This CRAS, as we mentioned here. This is let's say, a very well-established model here in Brazil with over $20 billion already in transaction per year happening here, right? If you can jump to the next one. So basically for SMEs, we're gonna develop their own program in the CRA level, the ABS level, right? So we'll help them on that. They will use our technology to grant credit to farmers that we're gonna securitize into the operation. For farmers, basically, they will assess this capital through the network of SMEs that will work with us, right? So the SMEs itself, the industries, and also the distribution companies. If you can jump 3 slides, please. Next one, please. So in terms of infrastructure, so it's a fund that invests in other assets, right? The fund will have like 3 tranches. The junior tranche, basically, we are targeting DFIs, philanthropic donors, and others. So it's around 10% of the fund, $5 million. We have a mezzanine that we are already discussing with DFIs, and it's basically counts for 20% and $10 million. And the senior tranche will have a guarantee, a credit guarantee, and we're gonna raise with institutional and commercial investors, right? The total amount of the fund is $50 million. And again, we're gonna have this diversification between assets that we're gonna invest and also the risk process that we're gonna implement with the Thrive solutions. If you can jump to the other one. So taking it into more details, we are already in progress in the due diligence with IFC to invest in the mezzanine. And also with DFC, we are structuring a guarantee for the senior tranche. And we are looking for still to raise $35 million to the senior tranche. So the minimum investment here for this tranche is $1 million. We are targeting CDI +1. Again, this will have a guarantee from DFC. And for the subordinated tranche, so the equity tranche here, we are looking forward to connect with institution, philanthropic donors, and so on. It's $5 million, the total amount. We have already the commitment from IFC for $1 million. And basically the benchmark return here is CDI, the Brazilian base interest rates, plus 1%. So this is a BRL fund. And next, and the final one, please. So in terms of perspective, our main goal here in the fund is to serve as a bridge for these companies. So the first phase is $50 million that we are raising now. So we have 30% of concessional capital. The second phase is a $200 million fund, basically with 50% of concessional capital. And then in the third phase, we intend to have something without concessional capital and structure this for the companies and create this, let's say, financial stability to this gradual creation of credit history. So thanks for attention. I'm looking forward to connect you in the breakout room.
Thank you, Mauricio. Yet another interesting solution tailored to a particular context, Brazil, and targeting one particular segment on the value chain, which are bio inputs, super important. And staying in the sustainable agriculture topic, now we have Regenera Ventures. This is an instrument with a bold purpose to support the transition to regenerative agricultural practices in Mexico. They invest in agriculture, forestry, ecotourism, and solutions across the agri-food value chain from farm to fork. So it is my pleasure to invite Laura Ortiz to present Regenera Ventures. Over to you, Laura.
Thank you so much, Maria. Thank you, everyone at the lab and everyone attending. So we are presenting a trailblazing pioneer fund, a women-led fund, specifically targeted Mexico, precisely because we've been working at this for the past 11 years. So if you want to get to the next slide, please. And so as you've seen, agriculture is not only the largest employer of the planet, but it's also everyone's life axis. But unfortunately, we're treating the soil as a factory and we're treating farms as machines. And what we've realized in Regenera Ventures is that when we heal the soil, we heal ourselves. So this is about everyone's health, and this is about our microbiome that is very related to the soil microbiome. So we need to move into biodiversity, that is everyone's only life insurance, and as much as possible move out of monoculture. and also out of agrochemicals and pesticides, because this is accelerating vulnerability and climate instability, and of course, the indebtedness of the communities that farm them. Next slide, please. And so in Regenera Ventures, what we identified is that within the nature-based solution scope, you have the protect layer that is very much donor-driven and government-driven. So the two layers that we're focusing in is the change in management of land use and the productive restoration. And we've realized that this can be very productive and not only increase in productivity in the end, but also increase margins. So it's a highly profitable way to contribute to climate change. Next slide, please. And so in this slide, what you can see at the far left is the bars, the purple bars is the IPCC recommendations. And as you can see, ecosystem restoration is the biggest IPCC recommendation. And on the right-hand side, the mint colored bars are how the climate finance is actually allocated. So as you can see, ecosystem restoration is the least invested one, the most underinvested, just as Maria pointed out earlier, and electromobility is the most overinvested. And so this is where you will get the most value out of climate outcomes from every dollar. And Rockefeller Foundation found this out and measured the opportunity that is massive last year in a publication. And so they realized that this is at least $4.5 trillion opportunity per year. Next slide, please. And so our approach is a holistic approach, as Maria mentioned, farm to fork. And the reason is that we will be looking to invest and partner with the ones that work directly in the soil. I'm going bottom up. And the ones that add value and have some infrastructure. And then the ones that transform the consumer paradigms into better consumer behavior and more biodiverse diets, and not only food systems, but also everything that goes around the landscape. And at the end, we need the regenerative infrastructure, or those enablers that are, for example, facilitating that transition to biological inputs, the carbon developers, the ones that are monetizing ecosystem services, so all of that. So it is a very holistic approach, the way that we are finding our pipeline, and there's over 300 identified opportunities that we've seen in Mexico so far. Next slide, please. And so part of the upside in these opportunities, the most important one comes from the cost savings. So this is a margin play. We need to increase margins for production precisely due to the so today, every technological package of industrial agriculture is making it more and more expensive every year. So really going back to agroecological management really saves a lot of the input cost. And also the diversified revenue streams. If we're looking to diversify landscapes, those new revenue streams can really complement the farmer's income. And this also brings a lot of stability and diversification for them. We can go to the next slide, please. So in our team, we've been working at this, Stevie and myself, we've been working at this for the past 11 years now in impact investing and climate finance in Mexico. We've been building relationships, and we've been building also our local discernment that I think is really part of our X factor. And Alma recently joined the team as a principal, and she brings in track record from BlackRock, from Elevar Equity. So together we cover more than $330 million in structuring. Antonio de la Rosa is an agricultural expert and also smallholder farmer that has already transitioned into regenerative agriculture in his own land. So he is the one advising us in regenerative systems, and Ana Caro Loredo, our senior analyst. So we're really a pioneer fund for Mexico, and we can go to the next slide, please. And so far we have commitments from the DFC of up to $4 million and from the IDB Lab of up to $5.3 million. That includes a ticket of the Green Climate Fund. So we are super happy to have those really large institutional partners. Also earlier this year, we got the commitment from Heading for Change that brings in the Donor Advised Fund of Impact Assets. So we're really excited about our investor pool so far, but we're still almost $4 million short of our first close because we need to reach almost $13 million for our first close. And there's still space for $10 to $15 million in our second close, which is our final close. So there's still a blended finance opportunity for all of you to join. If you're a brave investor and you're looking to invest in regeneration, the time is now. And so we go to the last slide, please. And so this is a 12-year fund. We're aiming for $25 to $30 million. And we will be covering, as Maria said, not only agriculture, but also cattle ranching, forestry, fishing. There's really a wide variety of ecosystem services that we'll also be investing in and partnering with. And the last slide, please. And so we really aim for biodiversity and social justice. And we really think that it is the time to invest in regeneration is now, because the biggest risk is not investing in this transition today. So thank you.
Thank you, Laura. That's truly an impactful instrument to address what is a critical sector for development in LAC, and deliver climate, nature, and social impact together. So look forward to the conversation in the breakout room. Now we will move to the Amazonia Impact Fund that's presented today by Aldo Soto. Through a mix of debt financing and technical assistance, this fund plans to support indigenous and Amazon-based organizations. Welcome, Aldo.
Thank you, Vikram, and thank you, Maria, for having us. Good morning from Lima, Peru. My name is Aldo Soto, Managing Director and co-founder of Amazon Impact Ventures. And with me today in the chat is Pajani Singha, our co-founder and investment director, who will be also answering your questions live. Next slide, please. Amazonia is an impact-first investment manager focused on the Amazon basin. Our team brings experience across investment management, development finance, and forest-based livelihoods. We've deployed over $9 million since 2020 in Peru, Colombia, and Ecuador, backing rural enterprises that are helping shift the economy of the Amazon towards regeneration. Next slide, please. The Amazon rainforest is facing a multidimensional crisis. Forest loss, biodiversity collapse, and rural poverty are reinforcing one another. Small-scale farmers often lack access to finance, technical support, and markets. That drives unsustainable practices like forest clearing to opening a new plot to increase production instead of increasing productivity, for example. And while they produce up to 70% of the food in Latin America, less than 1% of climate finance reaches them. In Peru, under 4% of lending goes to the Amazon region. So this is not just an environmental problem, it's a systemic failure of rural economic inclusion. Next slide. Okay. Our solution is to finance a new kind of Amazon economy, one rooted in regenerative agriculture, biodiversity-friendly value chains, and community-owned enterprises. We provide tailored financing to forest-based businesses, from an indigenous cooperative producing dragon blood resin to a US-based mission-driven company buying Amazonian nuts from local associations. These businesses aggregate smallholder producers and provide access to better markets, offering better incomes, building resilience, and reducing pressure on forests. Our impact-linked loans include performance-based financial incentives for impact KPIs, such as forest conservation, agroforestry, gender equality, and inclusion. Our impact thesis is clear. If we combine sustainable finance with strong local enterprises, we can create economic incentives that protect the Amazon and uplift its people. Next slide, please. To do this, we've launched the Amazonia Impact Fund 1, which is a $25 million impact-linked debt fund. This is an evergreen blended finance vehicle. We combine catalytic capital with private investment to de-risk high-impact loans. The fund is supported by a technical assistance facility, ensuring both financial and impact performance. And importantly, we don't need to reach the full target to deliver results. The fund is already operational. We've already deployed over $9 million across 17 sustainable enterprises. Next, please. So far, we've reached over 4,000 producers, 36% of whom are women and 32 indigenous. Over 160,000 hectares are managed under improved practices, 40 loans across sustainable value chains like agroforestry coffee and non-timber forest products. And these aren't just numbers. They reflect families who now earn more, communities with alternatives to extractivism, and forests that are worth more alive than cleared. And our pipeline is strong. The demand far exceeds our current capacity. Next, please. We are currently raising $20 million. We just raised $4 million since October last year and expect to reach $5 million in the next month. Investors can participate via the senior tranche with returns of 3 to 5% and/or the catalytic tranche for catalytic investors with concessional returns of 0 to 2%. So we welcome mission-aligned investors, foundations, family offices, DFIs, impact funds who are ready to back innovative finance models that serve both people and planet. But our vision doesn't stop here. We are actively building a pipeline to scale this model to 50 million in the next phase. That means deeper reach across the region, more catalytic partnerships, and a broader portfolio of enterprises protecting forests and also supporting livelihoods. So we invite you to join us in growing a regenerative, inclusive bioeconomy in the Amazon. Thank you.
Thank you so much, Aldo. Amazon Impact Vehicle is truly an example of how financial innovation and blended finance can be leveraged to create local capacities and financing where it's most needed in the forest with local communities, and better to prove that this is a growing business case to deliver not only impact, but also return. So kudos to that. And to close today's session, we welcome Lee Madeira, presenting the Biodiversity Bridge Vehicle. So Ponterra, after successfully implementing carbon projects in the region, now has developed this innovative vehicle, which is essentially a project finance platform that aims to develop reforestation projects and issue carbon credits, but also enable the investment in biodiversity credits and contribute to the development of these markets. So Lee, welcome, and over to you.
Thank you, Maria. Hi, everyone. I'm Lee Madeira, one of the co-founders at Ponterra, and I'm excited to share the Biodiversity Bridge Vehicle with you to close us out today. Now, the reason why we're talking about biodiversity, next slide, please. The reason why we're talking about biodiversity is because we're literally losing nature. We've experienced a 69% decrease in wildlife since 1970, and 1 million plant and animal species are currently at risk of extinction. Next slide. This isn't just a problem for people who care about obscure animals like the Goody sapphire tarantula, for example. And that's because over half of the world's GDP depends on nature. And with $340 billion annual financing gap for nature-based solutions, it's becoming increasingly obvious that biodiversity loss is only going to get worse. Private capital is a really powerful tool, as we all know, but yep, get that one. But it only provides $35 billion per year of financing. No, previous slide still. Yep, thank you. It only provides $35 billion per year of financing for nature-based solutions, and that's less than 1% of the annual nature negative costs that the sector is responsible for. So then the question is, how do we mobilize private sector investment in biodiversity? Next slide, please. Today, I'd like to take a closer look at carbon credits and biodiversity credits. Carbon credits benefit from being relatively mainstream, and they have an established demand. But they're designed to incentivize carbon, not biodiversity outcomes. And that's why 88% of carbon projects plant fewer than 10 native species. And to be clear, there's nothing wrong with this approach, but the monoculture plantation that you see here on the left, that provides no benefit whatsoever for biodiversity. Biodiversity credits, on the other hand, they're specifically designed for biodiversity outcomes, but they're a newer instrument without clear demand and with the market struggling to attract investment at scale as a result. But what if we could combine the two? Next slide, please. What if we could leverage the more established nature of carbon credits and then tie it to biodiversity credits? So carbon credits provide the investable foundation, while biodiversity credits incentivize the biodiversity outcomes. By bringing the carbon and biodiversity credits together, we can optimize for both carbon and biodiversity and bridge the gap between what we have today, which is carbon credits, and what we expect to have in the future, which is a more established market for biodiversity credits. Next slide. And that is the whole idea behind the biodiversity bridge vehicle. So let's take a 10,000 hectare reforestation project as an example with a total financing need of $45 million. With the BBV, carbon investors provide $30 million in exchange for a set percentage of carbon and biodiversity credits over 30 years. And then concessional capital provides the remaining $15 million as a loan with a fixed interest rate. And the repayment is only triggered by the sale of biodiversity credits. However, if the project doesn't issue enough biodiversity credits by year 10 to fully repay the loan, then the repayment is triggered by the sale of carbon credits. So what we're doing is we're tying the concessional investment to biodiversity credits to signal much needed confidence in that market, but also using carbon credits as a backstop to de-risk the entire structure. And for every $1 of concessional capital invested, $2 of commercial capital is mobilized and $10 of community benefits are created. Next slide. The BBV is structured as a blended finance vehicle, with the commercial portion being identical to the transaction that we closed last year with Microsoft to reforest 10,000 hectares in Panama. In just 1 year, we've already restored over 1 million trees across 100 species and recorded over 4,000 days of biodiversity monitoring. We have the expertise and the team to bring the BBV to market, including my experience with innovative climate finance vehicles, Hubert's as a biodiversity researcher, and Jill and David's experience in compliance for credit issuance. Next slide. We also have robust biodiversity monitoring already in place at our projects in Panama and Mexico, and we're the only ARR project in the world selected for Verra's biodiversity credit pilot program. Next slide. The impact of biodiversity restoration is far-reaching. We're restoring nature, sequestering carbon, cooling the local climate, reviving water systems, and uplifting communities on the forefront of climate change. Next slide. Now, some of you may be wondering, if we're already doing biodiversity-rich restoration through the sale of carbon credits alone, then why do we need the BBV at all? And the first reason is scale. The investment that we raised from carbon investors for our Panama project doesn't actually cover all the biodiversity-related costs. So Pantera is subsidizing the project with our own funds, and that's neither sustainable nor scalable. The BBV will make these projects financially viable on their own from day one, with the goal of incentivizing project development at the scale needed to truly address the biodiversity crisis. The second is market building. By taking a visible stake in biodiversity credits, the BBV introduces institutional confidence in the market with the potential to catalyze broader commercial participation. And then the final reason is urgency. The BBV mobilizes investment in nature now when it's needed the most. Next slide. So if you're interested in getting involved, the investment opportunity for concessional capital providers is designed to be a $15 million loan, but we can be flexible on various terms. So if the idea of a biodiversity and carbon-linked loan appeals to you at all, I'd encourage you to get in touch so we can explore structures. Thank you very much.
Thank you, Lee. Thank you for that great close to the pitch part of the session, and we look forward to a discussion, particularly around a project that's delivering carbon and biodiversity outcomes together in real life. Fantastic. Now we are going to move into the final part of today's session, our breakout rooms. This is a chance for those who've been patiently listening so far to continue the conversation directly with the project leads, ask the questions that you have been wanting to, and then dive deeper into the ideas that perhaps stood out most to you. There'll be 2 breakout rooms organized by regional focus. Breakout room 1, which will focus on Brazil, featuring the Amazon Food and Forest Bioeconomy Financing Initiative, the Land Banking Group, and the Growth Next Gen Agriculture Fund, GAN. And breakout room 2, which will be anchored by my colleague Maria, I'll be in the Brazil room, will feature the rest of Latin America, featuring the Amazonia Impact Fund, Regenera Ventures, and the Biodiversity Bridge Vehicle. You're welcome to join whichever room that interests you most, and feel free to switch between them at any time. To do this,